Jeff, can you check, make sure we live?
We are.
All righty. Welcome, everybody, and thank you for joining us at our home buyer seminar with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wayne II, team leader of Champions Real Estate Team. So on our Zoom call that we have here, we have Jeff Peterson, who's also a member of the Champions Real Estate Team, Rich Howdle, who's also a member of Champions Real Estate Team, Russ Williams with Arbor Bank. He is a mortgage lender at Arbor Bank off 168th and Center. John Vaca will be joining us shortly. He is manning the household with two young kids. So he'll be joining us. He's a home inspector. Him and his father own Home Standards Inspection Services. So thanks again for joining us. If you're watching us live, awesome. Feel free to comment any questions that you have as we go through our seminar here. And Jeff and Rich will kind of monitor, as we go through, because it's tough for me to see on the backside, the live comments. So feel free to comment. If you're watching this later, feel free to reach out to us on our Facebook page at Champions Real Estate Team, or on our website at championsrealestateteam.com. So, my background, I guess I've been around it all my life, fourth generation realtor. So growing up, in the industry, and, I kind of come from a coach's mindset. I coached a hockey team up until last year, coached a North high school team. So that's the same kind of mentality I take with my buyers and sellers. I know we're talking about buyers tonight, but when we talk about buyers, we also want to talk about the sellers as well, because it's, you're getting a scouting report on what the sellers are thinking, how their mindset works as well. So that's kind of what we're going to talk about. We're talking about 5 key points that you need to know, 5 things you need to know when you're buying a house, so that hopefully by the end of this, seminar, you'll have a good idea of what you need to do to get the ball rolling and be competitive out there in the marketplace when you're looking to buy a home. So as always, we're always happy to sit down with you one-on-one and go over anything, any questions. I enjoy doing that. I think that really gets a good game plan together for us to help you buy your new home. So that's one of those things that, it's just like an athletic team. You want to practice before you go out and play the game. We don't want to just go look at a house right away, not have a game plan set up. We want to be able to compete in the competition, not just participate. So that's things we talk about with our buyers, is that we really want to make sure that they know what's going on, in every facet of the real estate transaction, because there are many spokes in the wheel as we go through that transaction. And our job as an agent is to make sure that that's as smooth as possible going forward. So as we get going here, I will pull up our little presentation as we go through. So like I said, if you have any questions or comments, feel free to comment on our Facebook page. And if you're joined us on Zoom, you can comment through the chat window there as well. So I'm going to share our screen here, the PowerPoint that we have. So 5 things you need to know when buying in today's market. So first thing we need to know when we are thinking about buying a home is, what market are we in? Just kind of a 30,000-foot view of, just kind of perspective. When I got my real estate license in 2008, we had about 5,500 to 6,000 homes on the market. And we had about a 8-month supply of inventory. Well, fast forward 12 years, gone through, I feel, in my career, at least one cycle. In that there was a lot of foreclosures, bank-owned homes and things of that sort, in that housing bubble when it kind of burst. If you guys, anybody's seen the movie The Big Short, that's a good movie that kind of, summarizes what kind of happened in that time frame. So it was a good thing for me to jump right into it in a great market. So, but fast forward, like I said, 12 years now, we have about, as you can see here on the slide, we have 2,500 homes. So basically cut that in half. So what that kind of means is that, it's in turn become a seller's market. Supply and demand. There's not a lot of supply out there. There's a lot of demand. As you can see on here, there is about 1.8 months supply of inventory. And this is the whole Omaha multiple listing service, the numbers that I pulled up here. The thing that we're seeing, with buying in today's market, it's, the COVID-19 that we have, been working with, has changed some things. There's been that apprehensiveness of even putting your house on the market, going and looking at homes. We kind of switched a lot to virtual. So we do these buyer seminars about every quarter. So as you can see now, this is our very first one we've done virtually, as a live Facebook /Zoom. I kind of like it. Hopefully reach more people in that avenue that hopefully can educate them. So, with that being said, as you take a look at the chart here, we have pendings. So people are asking, how is the housing market amongst the COVID-19 pandemic? It is very strong. I know we wrote a contract this week. There at the time when we wrote it, there was 5 offers on it. So we do have to compete out there in the competition. As you can see on the chart here, the pending homes. So that basically means contracts written. That is what is under contract and has not closed yet. We are up 18% from April, which is a big jump. Here at Berkshire, May of 2019 was our biggest month for contracts written. And we are on pace to meet that, if not exceed that. So with all things being considered, the market is very strong. So what does that mean to you as a buyer? Well, if you're going out there and you're competing against more buyers, how can we position yourself, to be a stronger buyer? As we move forward, in the next step is kind of talking about mortgages. That's something that you can kind of position yourself. Be it a conventional mortgage, we'll talk about FHA, VA, and then obviously if you're buying cash. So, and it depends on in each one of these segments, when we sit down and meet with a buyer, it depends on what price point you're in, because each inventory segment is going to be a little bit different. The months of inventory is going to be a little bit different. Days on market going to be a little bit different. If you're above, 500,000, you're at a little bit more of a neutral market than you are necessarily a seller's market. So, it's kind of like the undefeated team reading its own press clippings. It's bringing them down to reality. And that's something that we sit down and talk to, with our buyers and our clients to make sure that they know exactly what they're getting into. So we can go out there and compete in the competition. We don't want to just go out and write offers and just, kind of hope to heck that we're going to get it. We want to compete and make sure that you get the house that you want. And, position you in that position to get that home. So kind of taking forward, so that's kind of the thing we look at when we talk about the marketplace, is knowing exactly, and we'll break it down to your street. So the same market analysis that I do for a seller when they're getting ready to sell their home is the exact same one I do for a buyer. It's sit down, show them the numbers, what makes sense for an offer. Everyone's saying, pricing their homes, in a seller's market at that high end. Ultimately you have to be comfortable, with the mortgage payment. What's your monthly payment? You may go to a lender, as we talked about in the next step. They may give you a purchasing power price of you're approved up to X. Well, that might be great, but what is your actual monthly payment in relation to that purchasing power? That's something we want to make sure that you're comfortable with moving forward. So, anybody have anything else to add kind of on the market aspect of it?
I mean, not much, but you said it all. I mean, it is hopping still. So if
I know, Jeff, you
out there and look, you're going to have to compete still for buyers for sure.
Jeff just wrote a contract down in Lincoln, and I just had a house, clients that I worked with, and they bought a house down in Hickman, just south of Lincoln by about 10, 15 minutes. And that market is probably a little bit more, almost, if not more active than what we are here in Omaha as far as supply and inventory. So that's something that, if you are looking in that Lincoln Anywhere, the Omaha and the Lincoln multiple listing services merged last year. So we have basically access to all the homes in Lincoln and kind of surrounding areas. So if we can help you in that area, we're happy to do so. I know Jeff, was just down there. I mean, if he wants to touch on a little bit what he kind of experienced down in that marketplace.
I mean, I would say it's every bit as competitive in Lincoln as it is in Omaha. Maybe, like you said, even a little bit more. I'd say you even find, I would guess, you can get about 10,000 more for a house in Lincoln than you would if that same house was positioned in a like neighborhood in Omaha. So not only is it very competitive there, I think houses bring even a little bit more money in Lincoln. But if that's where you need to be, that's the situation. But otherwise, pretty similar as far as low inventory and houses on the upper end. Definitely a seller's market there too.
So I mean, that is something that is it is, both markets are very, very, very active. And so as we go through this, as we talk about buying a home in today's market, that's our goal, is to set you up for success and to beat out some of those those other offers that are out there, and and put your best foot forward. So we'll move on down here to step 2. So kind of thing of this next up thing is kind of mortgage lending 101. So Russ and I kind of talk about what we need to do. So first things first is, when I have a client that contacts me, thinking about buying a home, walking them through the steps, one of the first things we talk about is, have you met with a lender, and that's just one of those. And some people feel, well, I'm not exactly ready to buy a house yet, so I'm going to wait until I'm ready to buy a house to meet with a lender. Well, I think it's one of those things you need to meet with them as soon as possible, whether you're thinking in a year, 2 years, where do you stand? Like my wife and I, we just built a house, and we met with Russ, probably 2 years before we even thought about building a house. And it's like, all right, where do we want to be? How, what's our mortgage payments going to look like? How much do we need to have down, for an initial investment? And that's something very important to kind of consider. And it's one of those that if you need to get credit cleaned up and things like that, that you just check to see where you're at, is one of those things I think is very important. And with the lending environment that we're in right now, it's tightened up because with the COVID-19 and layoffs and and furloughs and stuff like that, that they're predicting that for about every third to every fourth 25% of those new mortgages could potentially be in forbearance, where they're not making their payments, unfortunately, because of the environment that we're in. But yeah, I'll let Russ kind of take over, as we kind of see here, just kind of the different steps and kind of just go back and forth. So.
Sure. I'm going to echo a little bit of what you, both you and Jeff have said, that this is still a great time to purchase a home. Obviously, it's a very competitive market. And when it comes to purchasing power, anytime you're dealing with financed money, we need to take into consideration what is the cost of financing. I just want to give you a point of comparison in the event that any of you out there are thinking about buying a home, but perhaps are thinking it would be a good thing to wait. Consider this for a moment. Right now, we are sitting at 50-year lows for interest rates, nearly all-time lows, depending upon the day of the week for that matter. And if we were only to see interest rates rise by 1%, and if real estate values were to rise by 5%, which is quite possible as hot as the market is, your purchasing power next year is going to be going down by 18%, meaning you'll get a lot less house next year than you would this year. So I'd encourage you to visit with a lender and be prepared. As far as, if you don't mind, Mark, as far as initial investment goes, it's really going to depend upon the type of financing that you're using. Certainly, in the event that you are looking in a rural area, or if you are a military service member or qualifying veteran, you could get in as little as 0 down payment. Conventional loans might be as little as 3% down, but there are, in cases of first-time home buyers, some income-based subsidy money that might be used to help reduce that cost to maybe $1,000, in some cases even less. So initial investment is something that can come from your own funds. It can come from a gift. It can come from a grant. And there, at this point in time in 2020, are still some grant monies left out there as well. So there's no better time than the present in the event you want to look into buying a house. Anything you want to add there, Mark?
Yeah, I think the initial investment, I think some people think, and this is something I thought when I bought my very first house, and, coming from a family that's been in real estate for 4 generations, I looked at it when people say down payment, I always thought in my mind that I'm making a payment. I'm not getting that money back. And so, when I bought my first house, I had, investments in the stock market, bonds, and all that kind of fun stuff. And I was like, well, I don't want to pull money out of there to put it down on my house because I'm going to lose it. Well, my father basically he's like, no, you're not taking and losing that money. You're taking it from one investment vehicle and putting it into another investment vehicle, which is real estate. And at that time, I hadn't understood that, I hadn't got my real estate license and all that kind of fun stuff. I knew enough to be dangerous, but that's something that you're putting more, I tell my clients, it's like your house savings account. That's what equity is. It's your house savings account. It's not as accessible as you can go sell your stock and get it in your account in probably the next day or so. With equity, you have to get a HELOC, a home equity line of credit, to get that money out. So that's something that when you put more money down, at 20%, you won't necessarily have that private mortgage insurance, every month that you're paying to insure that loan. And if you put that money down, that's more money that's going into your pocket rather than paying the lender, or in case if it's a VA or FHA, that you're basically paying the government. So that's something that I look at, that if you have that, you can keep it in your pocket or put it, into your house savings account, just depending on where you want to put that money in that line. So, I mean, that was something that I learned, when I first bought my house, and I kind of go over with my clients, because that is I think something that's why we call it initial investment, where you hear a lot of people say, oh, your down payment for your house, down payment for your house. Well, I make a payment to OPPD, but I never, I get, electricity out of it, but I never get that money back. Where, as you turn around, if you sell your house, that's equity that's coming to you. So I guess we can kind of go on to loan types if you want to touch a little bit on that with Russ.
Yeah, generally speaking, there are two families of loans. You have government loans and then what are called conventional loans. In the government loan world, we're talking about things like VA loans, which is Veterans Administration for qualifying veterans and service members. Also, we have what they call USDA, or Guaranteed Rural Housing, in the event that you're looking at purchasing a home, perhaps in a rural part of the state, generally defined as a population area of 25,000 or less. They're also within the government realm. There is what they call FHA, which is Federal Housing Administration, that's administered through the Department of Housing and Urban Development. With each of those loans, FHA has a minimum investment of 3.5%. Both USDA and VA have minimum investments of 0. So structured properly, a person could get into the property with very little, if any, out of pocket for those loans. Now, the government loans, of course, are a little bit more difficult in a seller's market to get a contract accepted, mainly because with government loans, there are minimum property conditions that must be met. Things like chipped in peeling paint, trip hazards, maybe railings on stairs. And it's a general rule, if you are coming in with a government loan financing on your pre-approval and competing with other offers that are nearly identical in price and other terms that might be conventional in nature, all else being equal, the seller would more than likely take that conventional offer. But in the conventional world, we basically have two families there as well. We have what are called conventional conforming, which are going to be the terms Fannie Mae and Freddie Mac, that will have minimum investments as low as 3% for first-time home buyers, otherwise 5%. And then, of course, we have what are called non-conforming loans, which would pick up things like jumbo loans in the event that you would need to borrow generally over $510,400. But certainly, those are the two main categories of loans, conventional and government. And depending upon what your needs are and what your credit profile is, in the current market, conventional loans would likely be preferred by the seller and would make your offer stand out. Is anything you want to add to that?
Yeah, I think, and one thing, that we can kind of talk about is that if you are using an FHA or the government loans, and you may have some extra cash to kind of even the playing field, you may be able to offer an allowance, in the contract saying, buyer to, pay up to $500 of any FHA or VA repairs that may be needed. So that way, if there's a, peeling paint or things like that may come up, that hopefully can even the playing field that you can at least get a seat at the table to start the negotiations with that seller. So that's something that we've kind of done in the past to help, our clients in that same situation. The thing I kind of talk about with my FHA buyers is that, typically it's a 3.5% down for that initial investment, but then you also have the upfront funding fee. So you are essentially, but you're wrapping that into the loan. Well, you're paying the government that extra 1.5% upfront funding fee to get that loan. Whereas if you have that 5%, for a conventional loan, you may be able to, not necessarily have that PMI for the life of the loan once you reach that 20% equity loan to value ratio there. So that's something that you kind of look at. And that's why we say, sit down and meet with a lender, meet with us, and if that's a year ahead of time to get you into that position, that maybe we can get you into a conventional loan so that you're able to compete in that competition, when it's kind of a heavy seller's market out there. So that's our goal, is how can we, get the scouting report of what the sellers want. It's the same thing when I'm coaching a hockey team. What are the other systems that the other team's running, and how can we, best counteract those? And so that's kind of what we look at, and it's what's best case for you as a buyer. So yeah, I don't know if there's anything else I have to add as far as different loan types, but that's something that sit down and talk with the lender and ask them. Don't just have them say, well, this is the loan I think is best for you. Well, why is it? What's the difference between a conventional FHA, VA? What is the best loan for you? don't just take the first response that they give you, just kind of ask those questions, because sometimes you don't know what you don't know, and asking those questions can help you through that. So I don't know, Russ, if you want to touch on documentation needed to secure a loan, that's stuff that, getting in touch with the lender sooner than later can help line that stuff up as well.
Yeah, there's some general documentation that are needed for most any type of loan. First and foremost would be to document income. And that's typically done with documenting pay stubs, pay statements, leave and earning statement, whatever documentation you have of income for the most recent 30 days. In addition, you'll likely be asked to provide your tax returns, any W-2 or 1099 or K-1 documents for the most recent 2 years. There are some first-time homebuyer loans that might want a little bit more than that, but generally speaking, 2 years of tax returns and 30 days of pay stubs is what you would need to document your income. As far as assets, lenders are required to document where the funds are coming from that you plan to use. If those are funds that are in your possession, not only will the loan require it, but also the Patriot Act will require that those funds be documented. So usually 2 months worth of bank statements is sufficient to show that those funds are in your possession. Now, in the event you're working with grant money or gift money, or maybe even proceeds from the sale of a home that you currently own, there might be some other documentation needed. A credit report would be obtained by the lender, which is why, to Mark's point earlier, it's highly advised to start the process well in advance of when you think you may be wanting to proceed. And the reason why I highly encourage you to do that is it's not uncommon to see inaccurate or incorrect information on a credit report that potentially could be negatively affecting credit scores. And that may affect not only your interest rate, but your cost of mortgage insurance premium. Also, your homeowner's insurance can be affected by that. And many times, if you're working with an experienced loan officer, they can identify maybe some minor changes or tweaks you can make in your lifestyle that might allow those credit scores to rise higher, so that when you are ready to finance a home purchase, you'll be able to get the lowest possible terms.
Yeah, that's one of those things that when I went to buy my house in 2006, 2007, and I'm Mark Wayner the second, so obviously my father's the senior, and we pulled my credit report, and basically I had already bought a house, had a car, that was basically my parents' house, their car, and it was under my credit. And so it was kind of funny that basically I had to get that all removed. So if you are a junior, second, third, that's one of the fun things about being one of not having your named after your father and such. So that's something that you got to get in line. And even though you have different social security numbers, the Equifax and all the credit bureaus were fun to work with in that. But that is it's something to get that kind of hashed out if you need to, rather than going and looking at a house first, really loving it, and then talking to a lender, and then realizing you have all these different steps. It can really discourage you sometimes going through that. So next thing up is kind of what to avoid when getting a mortgage. That's kind of the old adage of don't go buy a car or a house, or not buy a car or motorcycle or anything like that that's going to kind of maybe throw off that debt to income ratio. So wait till changing jobs. If it's in the same industry, sometimes that may be okay, but it's also make sure you check with the lender, to verify that is going to be fine. In that regards, I guess, Russ, is there anything you wanted to add or talk about as far as avoidance?
Yeah, I would encourage folks to freeze all activity. Don't run up your credit cards. Don't go out and buy that furniture, those appliances at Nebraska Furniture Mart. I certainly understand you're excited, especially if you're buying your first house or upgrading to the dream home. Wait until everything is approved and closed with the lender. One of the federal laws that came into place a few years ago is that the lender potentially may be pulling the credit report to update it as late as the day of closing. So if there have been new accounts opened, or if you have left your job, or if you have, I've even seen folks spend their down payment money. Don't do those sorts of things. You want to, as much as possible, freeze all activity, but continue making your payments along the way. Certainly, life happens. We realize that. If life happens, your vehicle breaks down, you have an unexpected expense, give your loan officer a call, tell them what's going on, and talk about putting together a plan to make sure it's not going to negatively affect your ability to finance a home purchase.
Yeah. So, I mean, that's the biggest thing, is just being mindful, stay what you're doing. And I think now with the COVID-19, they're doing 24-hour employment verifications as well. So 24 hours before closing, they're verifying employment and stuff. So it's one of those making sure they kind of have tightened up a little bit on the lending side from that aspect of it. So, but appreciate you kind of running through all that with us, Russ. If there's any questions, let us know. Regarding lending, you can reach out to Russ at Arbor Bank. He's at the 168th and Center location, the Lakeside location, is where he's at. So we'll kind of move on to the third part, kind of the fun stuff. So now we know what the market's doing. Now we're going to move on. We know how much we can, our purchasing power. The fun part, the next part is kind of that search. It's creating a wish list for your new home. What do you want? What are your wants? What are your needs? What do you have to have? What are must-haves? What do you wish you would have? And that's going to kind of help. So when we sit down, with you and go over that, it's just kind of, we don't want to have a champagne taste on a beer budget, and kind of making sure that what we're looking at, and getting that purchasing power up first, so we know what we're looking for through that aspect of it. And then it's kind of, what area do you want to, where would you like to live? There's many different factors that come into play. It's, is it close to work, close to schools, close to medical? I tell my clients, go drive around to the neighborhoods that you like at all hours of the day. If you want to live by a school, make sure you go by the school during the times that they're, the beginning of school and when school is letting out. Do you like that traffic? I had one of my clients, I met him at the house, and they had workout gear on. I'm like, oh, did you go to the gym? I'm like, oh, no, we went for a walk and took the dog for a walk. And I was like, well, that's great. I go, next time go walk around the neighborhood, that you're at and see if you like it, and if you see a house that you like, text me the address. I'll go knock on the door and see if they want to sell, because that's another caveat that we're in when we talk about the market, is that sellers don't want to put the house on the market because they don't have a place to go. But if you have a particular house neighborhood that you like, let me know. I'm happy to go knock on the door, because we knock on the door and say, hi, my name's Mark Ware with Champions Real Estate, Berkshire Hathaway. Have you thought about selling your house? I have a buyer that drove past and likes your house. Well, if they say, yeah, well, ultimately you got to like it. They got to want to sell it. We get together, we do a market analysis and come up with a fair price, and then that gives that seller time to go find another home. They don't have to worry about, oh gosh, is my house going to sell? Where am I going to find another one? And so it kind of works out, kind of playing that matchmaker aspect of it. And then next up, kind of creating an online search. Our Champions Real Estate Team.com Facebook page. So I'll show you that here. There's some kind of cool features on there. Let me share a new screen. Where we at here? So when we come on to our Champions Real Estate Team page or website, so this basically is one of the more, it's up to date. This is one of those things I tell my clients, either use our website or use Berkshire Hathaway's website, or if you're comfortable using another company's site, that's perfectly fine. It's one of those, make sure you're using a local site, because that's going to pull from the multiple listing service the most accurate listings. The Zillows, Trulias, Realtors.com, they might not have the most accurate listings on there. So that's one of those things I tell my clients, is make sure we're looking good. I've had clients text me, hey, I want to see this house. Well, it's been sold, or it's already been sold for a month or so, and it's still actively on those websites. But when you come onto our site, you can check out any of the homes, advanced search, map search, if you want to check out if you have the house to sell, our valuation. But if you come up here to today's new listings, this is kind of our buyers section up here. Kind of a little video on the home buying process, kind of what we're talking about now. But right here is our download our free home buyer's guide. So I'm going to click on, once you click on that, it pulls up to our page here. So this is something you can print off. We also have hard copies of these. So when I meet with my clients, I usually give these hard copies to them so they can kind of fill them out. But obviously when it's online, you can print it off. But these are kind of your home buying objectives. So we kind of talked about your wish list, kind of goes through what you want. This kind of helps us set up a search for you. Home buyers property valuation checklist. This checklist, basically my father had created all of these things on here were one way, shape, or form some kind of complaint at the real estate commission. So these are things that when I talked about you don't know what you don't know, checking age of the structure, square footage for accuracy, lot lines. That's something that, when you're buying a house, you're buying the land as well. So make sure you know what's going on. So these are some things you can kind of look over, and some things you might not even think about, go, oh yeah, that I should think about that. But as you go through here, this is something you can kind of figure out if there's anything that is very important to you. Average utility bills for the last year. That's something that anyone can call. MUD, OPPD, Black Hills, depending on where you're at, the location, who services that house. and just ask them for the 12-month average. So that's really going to play an important part of your monthly payment, not just your mortgage. You're going to have, it's home ownership. Neighborhood and schools, making sure that the lines haven't changed as far as what elementary school. So that's stuff that, we can provide you with the school district information. You can call and check on that. Future development plans, amenities, and in the packet here, kind of just there were 7 reasons to own a home. I'm not going to go into all detail with these, but you can kind of check out our website. We also have an app that basically you can use, obviously on your phone. You can download that, access it from your phone, search favorite properties, all that kind of fun stuff, anything you can do on Zillow or on a lot of those as you go through. So lender checklist, as we touched on earlier, the lender checklist, getting your financing in order. Touched a little bit on that already. Common closing costs as we look through that. Kind of going through a little fast here, but want to kind of keep it short so we're not going to long on. So home inspection should cover. So John will talk about this just in a little bit, but that just kind of goes over what they talk about, preparing for the move, all that fun stuff. So these are all things that we go through with you when we kind of sit down and meet. Glossary of terms. So as we're talking about PMI, what is that? Private mortgage insurance. So that's the insurance that basically the investors have if you have less than 20% down on a house. So these are all kind of those terms you kind of come through. Utility services here as you go through, and then back over in Iowa as well. So going back to the site, we got our upcoming events and things like that we have a lot with our home buyer seminars. So a lot of good information you can pull from on our site. So I'll go back to our presentation. So where are we at? So we got online search. So making sure that you know exactly what you're looking at and finding the most up-to-date houses out there. So contact your real estate agent to set up showings and go view homes. So that's one thing that, we can show houses of any company out there and for sale by owners. So we're happy to work with for sale by owners, to get the house that you want. So if there's houses that you're out there and you're driving around, you see a sign, give us a holler. We can set up any homes. I think that's some first-time home buyers or, new to the market. They don't necessarily know, well, I work at Berkshire Hathaway. I can only show Berkshire Hathaway homes. Well, that's not, we can show anything. It's a cooperating MLS. So we cooperate with all the brokers out there. So that's one of those things we look at there. So what do I look at when I'm going through a home? It's one thing when I work with my clients, I kind of tell them, you worry about the oohs and the ahs and I'll worry about the details, because it's a very emotional. You're excited when you're buying a house. Excuse me. And those are the one things that, having been in it for 12 years and growing up around it, I sat at the dinner table, listen to my mom. My mom's in real estate. My dad's in real estate. My sister's in real estate. So it's one of those things that you hear the horror stories of things that have happened. And so as we're walking through the house, it's like I'm looking at the, ceilings. Are there any kind of repairs that we may see? What's the grading on the foundation that, most of the time buyers are worried about, ooh, look at the kitchen. The kitchen's great. And the master bathroom's been updated. Well, what's the age of the furnace? What's the age of the water heater, roof? The components of the house, the bones of the house that, stepping back and looking at it, is that important to you? So I think that's really important to, you can kind of put that lipstick on a pig and make the kitchen look great. But if your furnace and air conditioner are 20, 25 years old, that's going to be an expense that you may have to incur, in the next few years. So is that important to you? And that's something that, looking in today's market, I was just working with clients last week or so, and we saw a great house out in Hickory Ridge, like 180th and Harrison area. It was priced it was a first-time home buyer home, priced at $195. Had updates, but the furnace was older, and the air conditioner was older. But then I was like, you're paying, top dollar for things that you may have to repair. And I go, let's wait for a house that's the same price that has maybe those updated bones, the furnace, the air conditioner, the roof, those major expenses. And then if you want to come in and redo the carpet, redo the flooring, kitchen and stuff like that, you can do that at your leisure to do that. So that's one of those things I think is really important and really hits home with my clients, because, they're enamored and they walked in and they go, oh my gosh, I love this kitchen and this is great and it's updated. Well, what expenses are you going to incur? Because that's something you need to think about. And as a real estate agent, my goal is to give you as much information as possible so that you can make those decisions. And sometimes when we make those decisions right now, we show a house at 5 o'clock. They may be looking at all offers at 7 or 8 that night. So we got to turn around and it's very emotional and you're kind of thinking about it. You don't have a chance to think because you want to jump on it. And it's one of those that you got to take a step back. It's a big investment that you're making. It's one of the largest investments most people make. And that's our goal, is to give you that information and to think about it. And if you love the house, great, but and you know that furnace and air conditioner may, maybe on its last leg, keep it serviced, and you can buy a home warranty that may help cover some of that deferred cost. But those are some items, and walking through the house to see if there's any deferred maintenance items. I think some sellers right now are capitalizing on a seller's market. They go, I can get top dollar and not necessarily have to make those repairs because someone just wants to get into a house. Well, I don't want my clients to, to fall into that avenue of it where, they're doing deferred maintenance that should have been done. Now, if it's priced accordingly, that's fine. And I tell my sellers when I'm selling a home, well, what about the windows, or what about, the siding that needs to be repaired? Well, we want to capitalize on a top dollar. Well, an educated buyer is going to know that should be accounted for in the purchase price. Now, if you have an agent that may just go out there and, well, if you want to get the house, you're going to have to pay the listing price, maybe a little bit more, but does that make sense? That's what we want to make sure that you're taking care of, and have all that information at hand and get as much information to you as possible going through that. So, but the home search is like the fun part. That's awesome. We're going and looking at houses, and as you go and look at more homes, does the floor plan make sense for you? I kind of jokingly say to my clients that, some people are stuck on one thing, but they're not thinking about, what else. Where are you spending 90% of your home? Where are you at? If, I have clients that are like, well, I want a really big master bedroom. Well, that's great. How, other than sleeping in there, how much time do you spend in there? Because when you turn out the lights, it doesn't matter if your bed's fitted and your dressers and your clothes, it doesn't matter how big it is. But is the living room and the kitchen and the family room and the backyard, what are those? Are you giving up some of that just because you want a large master bedroom when, you can have a larger kitchen or an updated? So that's stuff that I tell my clients, where are you going to spend 90% of your time? I think that's where the decisions should be made, because you start making them on emotions, and it's that big picture. And I don't try to interject my opinion. I'm just going to listen, and I'm going to ask questions. Why do you like this? Why do you like that? That's kind of the fun part of being a real estate agent. It's like a scavenger hunt for me. I enjoy that, because it's like, you listen to your clients, if they're there with their parents, or the husband and wife, or the couple, or their significant other or such, and you're listening to them talk back and forth. And sometimes you may be looking at ranch homes, but what they're talking about between themselves, they're describing a two-story. So sometimes it's like, hey, let's go take a look at it. And if you don't like it, great. If you love it, awesome. So to me, it doesn't matter what house you buy. I just want you to buy the right house for you. And so I think that's kind of the fun part about being a real estate agent. Never, no two transactions are ever the same. No two clients are ever the same. So there's always that fun part about that. So anyways, Jeff, you guys have anything, Jeff or Rich, have anything to add on the kind of home search or what to look for in the houses?
Yeah, the only thing I would add is, relating it to today's market with the home search, especially in certain price points, keep it open. Obviously there's some must-haves that you're going to need in a home, whether it be, just yourself or a family or whatever. You're going to need certain amount of bedrooms. You're going to need, certain things like that, certain amount of bathrooms. And you may say it absolutely has to be this style, or that style. But I just encourage people, I guess, at least early on in the search, keep it pretty vague, especially considering it's a seller's market and we're low inventory. If you get your MLS search when you're working with an agent too specific, you're going to have like one house show up on the market that meets all those demands. So we can fine tune it down if we just absolutely find that, hey, this kind of house doesn't work for me, or this doesn't work, or I need that. But at least initially in the process, keep it open, keep an open mind. I've had a lot of clients walk into a house that they would have never wanted to look at, and it's the house they decide to go with. So, especially when you're setting up that online search, make sure to keep your options a little open. But that's the only thing that in today's market I would hit on.
Yeah, and kind of touching on that as far as the home search, I kind of forgot to mention that we'll also set up a search directly through the multiple listing service, that it will send you instantaneously emails when those houses go on the market. And those are one of those, like Jeff said, it's like keep a cast a wide net, and we send you the email. You don't like it, just delete it. And if you like it, hey, Mark, send me more information on this house. Awesome. That way nothing slips through the cracks, and then we can broaden the search, or we can narrow it, like Jeff said, that you can kind of fine tune it. But it's kind of figure out, do you want a multi-level, tri-level, split entry, ranch, story and a half, 2-story. There's tons of different houses out there. Do you want a north facing, south facing, west, pool, no pool, all those type of things there's so many different options out there that you can do. And I think that's what you really got to look at, is just making sure that you know what you want, and you're not going to know until we go look at it. You don't know what you don't know, and I don't know what you don't know. Us on the Champions. That's why sitting down, meeting, talking, going and looking at houses and seeing what those options are out there for you really helps. And it's, like I said, it's a scavenger hunt. It's kind of fun. So anyways, we'll go on to the next one. So if there's any other questions, comments, let us know. So once again, championsrealestateteam.com. You can jump on there, any searches. Give us a holler if you want to get a direct search. When you favorite houses, you can set searches, and it'll also send you those houses that meet your criteria. But setting it up directly through the MLS, it'll be instantaneously. And if there's any price changes or anything like that. So that's something that we can help you get set up through that side of it. So as always, if you have questions, comments, let us know. I'm happy to help you. Reach out to us via our Facebook page, jump onto our website, and on to the next one. So the offer. So this is something, once we find the house, now it's like, what do we offer for the house? What should we pay for it? The market determines the value. Right now, like we touched on, it's a seller's market. So, we have to basically adjust accordingly. So like I said at the beginning, is we'll sit down and do a comparable market analysis of what the house, the sticks and stones value of the house. It's $200,000, but it's in this area. It may go up to 210, 205, 220, and the big thing is it's going to have to, pass, an appraisal, so that's something that you have to look at too. And I know Jeff had a house, a seller, correct me if I'm wrong, but he had a house that basically they went above. It was like listed at 240. They offered it 260, and we didn't think it was going to appraise, talking to the buyer or to the seller. And we're like, we're playing with house's money, but that buyer offered to pay the difference if it did not appraise, and they ultimately just wanted to buy a house. They were, tired of losing out on offers. Well, that's not necessarily something we would advise, because you're paying something more than something what it's worth. But yeah, so that's something that we looked at going through there. So yeah, what should you offer for the home? I always tell my clients too, in this market, that we do have the multiple offers, and you have what we call an escalation clause. So basically what that is kind of like an eBay auction. You set a floor. So let's say it's a $100,000 house. It's listed at $100,000, but I'll go up to 110, and I'll go up in increments of, let's say, for example, $1,000 higher than the next highest offer's net offer. So that's something that you kind of play. And your clients, the $1 million question, how high should I go? Well, ultimately it's got to appraise, but ultimately you have to have that number in your head that when you put your head on the pillow at night, are you comfortable with that, house payment at that price? And if you're not, then it's not meant to be. We'll go find another one. That's something I think people get so emotionally involved in that. And our goal and our job is to stay emotionally out of that. Our goal is to present you with the facts and, do what's best for you. As a fiduciary, we have to do what's best for you in your best interest. So that's one of those things that we touch on with regards to that. So that escalation clause, that figuring out what to offer for the house. And there's been houses that, I sat down with a client that was coming down from South Dakota, and I literally sat in the office here with them up on the TV, went over the market, and I'm like, what was it? It was a house that was like 1,000 square feet around Exarban area, and it was listed for, I don't know, 185 or something. And my comps basically put it at like 160. And I was like, someone may pay that for it, but I can't justify paying that. So that's something that we're going to be upfront and honest with you. And I told him, I go, someone's going to offer that, and someone's probably going to get it, in this marketplace, and it may appraise for that. But that's something that we want to make sure that you're educated with that offer going forward. So, what will make your offer stand out? Russ touched on earlier about the financing. So that may, make your offer stand out. Ultimately, it comes down to purchase price, being flexible with closing date, talking about home inspections, as we're going to get to a little bit here. Some buyers are waiving the home inspection. I do not recommend that. You're making one of the largest investments that you're most likely going to make. So you want to make sure that it's inspected. But there is an option that you can do. So we have 3 options when we do a home inspection: option A, option B, and option C. Option A, after doing the home inspection, you can accept it as is. Option B, you can request any repairs to be made by the seller. Option C is you can cancel the contract based on the home inspection of something that you found. And sometimes, buyers will choose to only do option A or option C. So they're not going to choose option B, where you're going to ask the seller to repair a leaky faucet or stuff like that. And that gives you an opportunity to at least get your foot in the door to start negotiations with that seller. And if there's something major that comes back, cracked heat exchanger, bad roof, mold, something that you don't feel comfortable with, you can cancel the contract from that aspect of it. But, that's why doing a home inspection is very important. So you know what you're buying. Some in different price points, what may make your offer stand out is offering to pay for the seller's closing cost. Now, ultimately, you have to have the cash to do that at closing, but we always hear that the seller pays the closing costs. Well, really the seller, I guess, jumping back to the mortgage side, the seller really is not paying the closing costs. The seller is allowing you to finance that into your loan throughout that process. But on the flip side, what I'm talking about here, making your offer stand out, you can offer to pay the seller's closing cost. Say let's go back to the $100,000 example. Buyer to pay up to $3,000. So now that seller is going to net $103,000 of sale of the house. But the purchase price is only $100,000, so it only has to appraise for that $100,000. But you have to come to the table with an extra $3,000. Now, some people may not have that, but it's an option that's out there that we kind of talk about through that process. So that's kind of flexible in closing dates, inspections, earnest deposit. So I guess that's kind of something that's a deposit that basically is kind of that good faith that I'm going to perform on the contract. That's given at the time that the contract is written, submitted, and basically goes to the title company and sits in a non-interest bearing trust account. And you will get that back once the house closes. So say you get cold feet and you walk away from the contract, you would forfeit that earnest deposit to the seller for canceling the contract. Now, if it's contingent upon the home inspection and it comes back, there's a bunch of stuff that needs to be repaired, you don't want to do it, you don't want to mess with it, cancel the contract, that earnest deposit come back to you. Now, ultimately, we talk about upfront expenses. So expenses prior to closing, you have an earnest deposit that will get cashed within probably 24, 48 hours after we write the contract. And then if you're doing a home inspection, you'll pay for that home inspection at the time that the home inspection is completed, which is typically within 7 business days of writing the contract. So how long does it take to close on a house? Typically on average 30 to 45 days with COVID-19 and appraisals and refinances, maybe a little bit longer, but that's something that we can negotiate with the seller. But I always tell my clients, we want to stand out. We want to be flexible on that aspect of it. So, but I don't know, John, how the kids doing? Ready to rock and roll on a home inspection. So John Vaca has joined us with Home Standard Inspection Services. And he will kind of talk about importance of a home inspection, what they do, what they look for, how they're working with the buyers in our COVID-19 environment. So I'll pull up your, I'll stop sharing that, but I'll pull up, you can talk and I'll pull up your Facebook page.
Okay. Yeah, thanks for having me, Mark.
Yeah.
Really appreciate the opportunity. Yeah, you might hear a little bit of child noises in the background, but trust me, they're okay. But yeah, in this market, it's been different for us as home inspectors. We're doing a lot of telephone conferences, walkthroughs to describe the house. Before this, we would always meet with the client at the house and go through the inspection report on site, and walk them around and show them everything. So in this situation, we're trying to be cautious for everybody's safety. So we've just kind of landed on the side of being safe for everyone, for the sellers, for our home inspectors, for the buyers. So we'll do the home inspection, and then I'll call the client after I email them the report. And we have been using Zoom like this, so I'm able to share the screen and go through the report, which is pretty slick. A home inspection, it is going to be, we're looking for the major items. We're looking for things that you would want to know about. when you're buying the house that maybe you don't see when you walk through it for 10 minutes, like Mark said. So, I've been doing this for coming up on almost 10 years. So once you start doing it long enough, you figure out, you see what to look for on certain houses at certain ages. So I just, you having a professional come in, give kind of a once over on the house, look for the major items. I did an inspection the other day, and I'll just give a couple examples from it. But I was, it was a 1970s house. We had just had a lot of rain, which is a great time to have an inspection because you can try to find any problems that might be happening with water. So I went down in the basement. I have a moisture meter. I was able to test a couple corners in the basement, and they were damp. And I pulled back some baseboard a little bit, and there's a little bit of what looked like possibly mold, in between the baseboard and the drywall. So I went outside, in the patio. It's a brick patio, and it was right up to the foundation. It was sloping back. And then on the other corner of the house, the dirt was just real low around the foundation. So that's just all that water that comes, off the roof is going to dump next to the foundation and then come back into the house. So they had no idea that there was a wet basement there. I went down there, explained it to them. They actually did come to this one, so I was able to go down and point it to them. And just explain, it's some wheelbarrows of dirt that's pulling up some of the brick, putting some dirt down, putting the the bricks back down. Real simple idea. When the water falls, when it rains, you want it to drain away from the foundation. But so many houses I see just have real flat earth around there. The one other thing in the house I wanted to talk about was the furnace. The agent and the client, I said again, it was a 70s house. It had the original furnace in there. So it was 45, getting on 50 years. But it looked very old. Obviously, it was all rusted and everything. But it was an electric furnace, and they didn't realize that. Old gas furnaces, if they're too old, can start to become like a safety concern because you're worried about the cracked heat exchanger and carbon monoxide coming into the house. The electric furnace is pretty basic. You have the blower fan, you have electric heating elements to heat up. So even if it stops working or it's too old, it's never going to be like a safety concern. So I told them, you can just keep running this. It's not going to be real efficient just because it's older. But you can keep running it. This isn't something you have to immediately replace. So they were, sometimes I give good news to people too. So that was one thing coming in, they just saw it and they're like, oh, we're definitely going to have to replace this. But
Yeah. I'm just looking on your Facebook page here. So, these are a couple of things, just like the corroded wires. And that's just things that when you walk through a house for one showing, and in this market, we don't always get a chance to go back and look through it a second time to get a closer look. But these are things that what they're catching, why you do a home inspection. It's fire hazard. And the other thing is kind of, that's some, you might not always catch. You just look up on the ceiling and you see, oh, there's smoke detectors, but this one is just a carbon monoxide alarm. So it's not actually a smoke detector, so that's one of those things. You may put your head on the pillow and, gosh forbid, there may be a fire in your house and nothing goes off and you thought you had smoke detectors.
Yeah, I had like 12 CO alarms and no smoke detectors.
You're definitely going to be safe from the carbon monoxide, but yeah, so that's one of those things that's the importance of doing those things. And that, it's having another set of eyes. If you have questions, and John, is always, helping our clients. I know even after the fact that he and I've gone to other houses of the clients, 6 months, a year after they bought it and had questions about things, and giving them, the best, answers we can. And ultimately recommending if there's any, I'm not a plumber, I'm not an electrician, my suggestion is always talk to the experts in their fields. And, we have connections in that realm too, to get your names and numbers on that. So appreciate you kind of going over that, John, and joining us, and hope the kids are doing well and all that good stuff. So, but yeah, if you can jump on their Facebook page and they kind of share some good information, when they're going through houses and such. So, but anyways, so we'll jump back on the kind of wrapping up here. So kind of closing the sale. So basically now we've essentially got the offer going. What do we need to bring to closing? a valid driver's license or a, government ID, passport and such. So that's something, and be ready to sign a lot of documents. What we're doing now is kind of loosened up a little bit. I know here at Ambassador Title at our office, they were doing garage closings where you pulled in, they went over all the documents like the day before of everything and then have you sign in your car. I know they just sent out an email this week. They are now doing in-person signings with just the people that are signing. So us agents aren't allowed in for that safety aspect, that social distancing. But that's just something that depending on the title company may have different guidelines or guidances that they're following. So that is something, making sure that everyone's being safe through there. So, but setting up utilities and other services. Here at Berkshire, we have a program that kind of does that for you. So it's Move Guru. So, once you're kind of getting ready, they'll get your information. They can do it for you. If you want to do it on your own, that's perfectly fine. But that's something, making sure you transfer those into your name. If you're doing Dish or you're doing Netflix or any of that kind of stuff, your internet, however you set up your TV stuff, going through that. Sorry, next up, doing a final walkthrough. So that's basically going through the property and making sure that it's in the same condition that we saw it in when we first looked at it, when we wrote the contract. Making sure there's not huge holes in the walls, big stains on carpets, things of that sort. We're not necessarily going through and doing a whole home inspection again, but just making sure. I typically do those with the government, basically having to make sure all the numbers are in within 3 business days or 3 days prior to closing. We usually do that walkthrough maybe 5 days before, but also can do them 24 hours before, but just making sure if there's anything that big that comes up that we can adjust purchase price for something, that we can still do that and make sure our closing is all lined up and ready to rock. So, but yeah, the final walkthrough is making sure there's nothing changed in regards to that. And what you should not do prior to closing is kind of touching back on the mortgage side, buying the new car, anything that's going to add to your credit, or take on any debt, changing jobs. We touched on that. So that's a lot of it. As far as closing the sale, there's not too much going through there. But that's kind of just a general synopsis of kind of what you need to know when you're buying a house. Ultimately, I love sitting down with my clients and going over the purchase contracts and all the documents that we do go over through there. So that way, when we do sit down, if we go look at a house, tomorrow at 5 o'clock and we got to write a contract, the first time you see that, if the first time you see the 10-page purchase agreement is right when we got to make a decision in 2 hours, it's a lot to digest. So sitting down, going over those documents, answering any questions that I have with you or that you have for us, really helps that process. And really, you're more comfortable knowing what you're getting into, in that aspect of it. So it's just, being well informed, going through that side of it. So, but I think anything else that Jeff has, Rich has, anybody have anything to add or I missed or talked too fast on, or any questions out there?
No questions on the Facebook Live at this point, but what I would say is if you guys watch this after the fact, because this will be posted on our website and on our Facebook page, please ask them whether they be on there or just through our Facebook page. You can obviously message us at any time and ask us questions there, but no, you covered everything pretty well, Mark.
Yeah, so I talk a lot. That's what people always say. So anyways, like I said, my goal is to coach you as a buyer, to know exactly what you're getting into throughout the entire process. So it's, like, I don't know what you don't know. So asking questions, I don't want to ask that, it might be a dumb question. Ask us, send it via Facebook or, if we're in a meeting, my goal is to get you that as much information as possible. And I'm going to explain why we're doing what we're doing. That's one of those things I learned, coaching hockey, is that sometimes you got to show the players exactly what they need to do to get the job done. And so that's the same thing when you're in business and you're in real estate. It's just, how can I help you get the house of your dreams? And does it make sense for that house? Let's think about it. You tell me, the purchasing power and all that kind of fun stuff, making sure that you know exactly what you're getting into and the types of houses. I go back to the example that we had earlier of the house, when you're looking at, the bones of the house. It may have good bones and it's got a lot of lipstick on it to make it look good, but you may have other expenses, that you might not think about. So that's stuff that when we're looking at those houses is to really take it as a thorough of a look as we can and then ultimately have, John, and his company or a home inspector go through it and, with another fine tooth comb, and then lending basically setting us up, to win the house essentially. One thing I know Russ does is he's happy to call, the listing agent, and talk to that listing agent. He's not going to divulge any confidential information, but it is one of those that it's like, hey, we have all their paperwork, we have all their documents. They're basically almost through underwriting. All we need is a house, and that's some powerful things when that seller their next house may be contingent upon the sale of their current home that you're trying to buy. And if you got a buyer that's kind of willy-nilly and hasn't really got all their paperwork in, and that lender's like, yeah, just go find a house. I'll get you a pre-approval letter. We'll get it written. And then all of a sudden, they don't have all their documents into them and the delays closing. And then it's just a domino effect. Whereas if, the lender and Russ can give that listing agent a call and say, hey, these buyers, Joe and Stacy Smith are ready to rock. We just need a house. We need an appraisal, and we're good to go. That's comforting for a seller. Now things can happen, obviously, but those are some things in that regard. So, but yeah, I appreciate everybody joining us. If you're watching this later, like Jeff said, give us a holler. Check out championsrealestateteam.com. On there, we have our buyer's packet. I'll jump on there and show you that again, so you know exactly where that is if you're just joining us. There we go. So basically, you go onto our main page, and if you can click on Start a Search, Save a Search, and then we'll ask you to register. So all that information basically comes to Jeff, Rich, Thor, or Janine, and myself on our website, and so we can reach out to you and ask you any questions. But that information isn't going anywhere but then the 5 of us on our Champions Real Estate team. So clicking on the new listings basically takes to our buyer page. Scroll down just about little ways, click on our home buyer's guide, and it'll basically take you right to all the information that you need, print it off. We're also happy to deliver it to you as well. But it kind of gives you all the different houses out there. Also in Lincoln as well. So like we said, if you're looking for homes in Lincoln, we can help you in that manner too. So yeah, with that, thank you again for joining us. Thank you, John, from Home Standard Inspections, and Russ with Arbor Bank, and Rich Howell with Champions Real Estate Team joining us as well, and Jeff Peterson. Anybody have anything else to add before we sign off?
Give us a call.
Yeah, happy to help. Thank you guys for joining us, and thank you. Try to keep it, we're just over a little bit of an hour. So appreciate it, and take care, stay safe, and till we meet again, right? Take care.